Journal or book of prime entry consists of 7 types. 1 is general journal, 2 purchases journal, 3 sales journal, 4 return outward journal, 5 return inward journal, 6 cash receipt journal, and 7 cash payment journal. General journal is used to record the following: sales or purchase of non-current asset on credit, correction of error, opening entries, transfers, withdrawal of inventory for owner own use, and adjustment. Now we look at example for the purchase of non-current asset, which is office furniture worth RM6,000 on credit from Alan. This transaction will be recorded in general journal. The format will begin with the title, general journal, followed by the date, detail, and then the folio. Folio is the cross-referencing code, and the purpose of the folio is to be able to trace transaction easily to different record. For example, GL. GL stand for General Ledger. APL stand for Account Payable Ledger. And then after folio, we have debit, and after debit is credit. So to record the transaction of example 15.1, office furniture will be debited with RM6,000 because purchase furniture asset increased, so increase in asset debit. Whereas Alan will be credited because Alan is account payable, so since liability increase, it will be credited. So there are 2 ledger for this transaction. One is general ledger and second is account payable ledger, Alan. Office furniture will be debited with RM6,000. Alan will be credited with the same amount, RM6,000. Next, let's look at the example 15.2. This is the example for the sale of non-current asset, which is typewriter. When the business sold its typewriter, asset will decrease, therefore credit typewriter. And at the same time, the amount of its account receivable will increase because the business sold the asset to Nina by credit. Therefore, asset Nina account receivable will increase RM300. There are 2 ledger for this transaction. One is account receivable ledger Nina and another one is general ledger typewriter. In Nina account, the amount RM300 will be debited, but in typewriter account, the amount of RM300 will be credited. Next example is 15.3. So this is the opening entry. Opening entry also will be recorded in general journal. The transaction is Kamal wishes to begin a new set of accounting book. He has the following asset and liabilities. So these are the balances for asset and liabilities. The normal balance for asset is debit side, whereas the normal balance for liability is in credit side. And from the total amount of asset and total amount of liability, you can calculate the amount for equity. So for asset will be recorded in general ledger, but for liability, it will be recorded in account payable ledger. Let's have a look. So we have here office equipment, office furniture, cash, inventory, all are in debit side. Okay, these are the opening balance for office equipment, RM7,000 debit. Opening balance for office furniture debit, RM2,500. Opening balance for cash, RM1,200 debit. Opening balance for inventory, RM4,300 also debit. And for loan from BBMB, the opening balance will be in the credit side. 5,000 ringgit, 1050, the opening balance for supplier Sdn Berhad is in credit side. And for equity, the amount of equity is 8950, is also in the credit side, but in the general ledger. Example 15.4, Mr. Ong owed the business 7,000 ringgit. He fails to settle his account and wishes to pay his debt by giving up his own car to the business worth 7,000 ringgit. So when the business receive car from Mr. Ong, asset will increase, therefore debit, and the amount owed by Mr. Ong will be credited 7,000 ringgit. So there are two types of ledger. One is general ledger for car, and then the account receivable ledger for Mr. Ong. Car debit 7,000 ringgit, Mr. Ong credit 7,000 ringgit. And the last example for general journal is example 15.5, where Hassan is a watch dealer and he took a watch 2,000 ringgit as a present for his wife. Therefore, you need to record this transaction in general journal, because this is the record for drawing of good by the owner, amounted 2,000 ringgit. So equity will be debited because equity decreased due to the drawing, and then the account purchases will be credited with 2,000 ringgit. Both are in general ledger. So in general ledger drawing, debit 2,000 ringgit. In general ledger purchases, credit 2,000 ringgit. So that's all for general journal.